All of you here with us tonight, and we, for those of you who are joining us for the first time, we are excited to work some practice problems together, talk about some concepts, and generally help everyone on the call prepare for their real estate exam. We are going to be covering whatever sections you want tonight. So if there are things that during your time taking your real estate classes or in preparing for the exam, you found certain subjects particularly challenging, then by all means, we will focus on those this evening. So if you could follow Tanya's lead and go into the chat box right now and let me know which sections you want to cover this evening. And we will try and get to as many as we can, or at least the ones that the majority of people want to focus on. So please pop into the chat box right now. I'll give you guys a couple minutes, a couple seconds rather, to take care of that. Let me know what it is you want to focus on. Victoria and Nicole both say law. Ariel says finance. Finance from Kit, license law. All right. Great. All right. Sounds like law and finance are going to be the front runners for tonight. So I will go ahead and take us to license law and the rules of the Ohio Real Estate Commission. That's the law that we wanted, right? I think that's the one that we wanted. So let's go ahead and pop in here. This is going to be on your state section of the exam and one of the larger ones. And then we'll knock out law. We'll hit finance. We'll hit real estate calculations. If we got time left over at the end, we'll go to contracts, because as you hear me say every single week, the largest portion of your real estate exam will be focused on contracts, and other parts of the real estate exam require you to understand contracts to get to the right answer. So it never hurts to brush up on contracts. All right. So I'm going to read the question, read the answers, A, B, C, D. You throw in the chat box what you think the answer is. If you don't have any idea what the answer is, please just throw in a question mark so we know if you are struggling with the concept or need to review anything. All right. So if the superintendent pays any amount from the recovery fund in settlement of a claim towards the satisfaction of a judgment against a licensed broker or salesperson, A, the salesperson or broker must pay a fine of $2,500. B, the license of the broker or salesperson is automatically suspended. C, the license of the broker or salesperson is automatically revoked. Or D, there is no action against the broker or salesperson as the fund is set up to protect the public. All right, B's all over the chat box, and that's correct. So what happens is, if any recoveries are paid from the recovery fund, then you're automatically suspended and you won't be reinstated until the broker or salesperson has repaid that amount to the fund in full. Now, these are very rare occurrences, so don't expect that that's going to happen to you at any point, let alone multiple times. All right, a person making an application to the recovery fund for payment must file an application to recover within A, 90 days after the termination of all court proceedings. B, there is no statute of limitations against the recovery fund. D or C, 1 year after termination of all court proceedings, or D, 60 days after the termination of all court proceedings. So what time period must a person make an application to the recovery fund for payment? When must that file? All right, looks like everyone feels pretty strongly that it's 1 year after the termination of all court proceedings, and that is correct. 1 year to file an application to recover from the recovery fund. How many hours of continuing education are required by an Ohio licensee over a 3-year reporting period? Is it A, 30 hours, B, 20, C, 35, or D, 26? All right, you guys know this one. It's A, 30 hours every 3 years for continuing education. 20 hours in your first year of post-licensing education. For anyone that was a part of the Hondros College for your real estate classes, you have that included in your real estate courses, but that's where the number 20 is going to come in, is post-licensure for your first year. And then it's 30 hours of continuing education every 3 years for as long as you hold a license. An auditor appointed by the Ohio Superintendent's Office asked to review a broker's records. What must the broker make available? A, broker's tax return, income tax returns. B, personal property taxes. C, sales contracts and listings, whether or not sold. Or D, sales contracts but not the listings. All right, lots of C's in the chat box, and that is correct. When an audit is taking place of a brokerage, they want to look at sales contracts and listing contracts, whether sold or not. Question number 5. Although not mandated by statute, the Division of Real Estate recommends that for the purpose of document handling and record keeping, A, all agents should have ready access to all files. B, only the agent who works on the file should have access to the file. C, all files be listed on the internet in a public place. Or D, a non-licensed clerical employee should have control of all the files. All right, I'm seeing A's and B's and A's and B's. Looks like it's pretty evenly split, but maybe there's more A's. So as the group wants, that's what we'll go with. And the answer is actually D, right? So files in this scenario, or in this equation, or question rather, are the actual paperwork for your clients, right? That are and related to your deals. So you wouldn't want everyone to have access to everyone else's files, right? That wouldn't be good. And in fact, from a brokerage standpoint, you're going to want to have one person that manages the files, which we do at our brokerage. And so the official rationale here is the Ohio Division of Real Estate now recommends that the office files be kept under lock and key under the control of a non-licensed clerical person. Furthermore, faxes should be handled by non-licensed clerical personnel and distributed only to the agent handling the appropriate file. So this is, look, you just got to know this, I guess, one of those things, because now so much is managed digitally and you have access to your files that you share with our office, and vice versa. And so, just know that this is their recommendation, that you gotta have a non-licensed clerical employee controlling those. All right, question number 6. If given the choice, what type of listing agreement would a seller probably prefer? A, an open listing. B, an exclusive agency agreement. C, an exclusive right to sell. Or D, a net listing. All right, plenty of B's in the chat, and that's correct. An exclusive. So the reason that they would want this is because this one affords them the opportunity to sell the house without paying a commission. An open listing just gives it to everybody, so that whoever brings the buyer, they have to pay. An exclusive right to sell requires them to pay the listing agent regardless of who sells the property. And a net listing only guarantees them a set amount of money. So the exclusive agency agreement gives them the opportunity to sell their house at a price that they negotiate without paying a commission. Which of the following is not a management level licensee? A new salesperson, B, a salaried licensed office manager, C, a team leader, or D, an associate broker? Which is not a management level licensee. So the answer here should be A, because everybody else has supervisory roles, right? So the salaried licensed office manager is running the office. That is an individual that would be designated a management level licensee, someone in my position. A team leader is somebody who owns a real estate team. Excuse me, the team leader is actually what my official title is, and it's just another version of that. And then an associate broker obviously is the broker for the office. So the only person that's not a management level licensee, that doesn't have authority or supervision or anything of that sort over any other individual in the company, is going to be the new salesperson. They're just a salesperson. That's what you all will be, and you will not have to have any managerial responsibilities, which is sometimes very attractive for a lot of people. All right, question number 8. A buyer is going to make an offer on a seller's home. The listing agent asks the buyer for $1,000 in earnest money. The buyer does not want to give $1,000 in earnest money, but the listing agent says that's state law. Which statement is true? A, earnest money is set by federal law. B, the buyer must give $1,000 earnest money. C, earnest money set by state law. Or D, the listing agent is wrong. There is no state law requiring a minimum or maximum amount of earnest money. Get those D's in the chat box. That is the truth. Earnest money is good faith money. And there is no minimums set. It is negotiable. All right, question number 9. Broker X is managing a client's 5-unit apartment complex. The broker receives deposits of $100 for each unit. What must the broker do with the rent deposit receipts? A, deposit them in the property management account in the client's names. B, commingle the funds with the trust account funds. C, deposit them in the broker's trust account. Or D, deposit them in the office management account. What should we do with those deposits, rent deposits? All right, I'm seeing some C's and some D's. So we'll go with C, since that's what everyone had. The answer is going to be A, because this is a property management situation. They can't go into the broker's trust account. They need to go into the property management account with the client's name, right? So that is, in effect, that client's money that will be held from a management standpoint and used to cover anything that those deposits cover. And so the broker is managing the properties, and anyone who is managing properties has to have separate accounts set up for every one of their clients. Be real clear, you cannot manage properties for our, you can't do property management for somebody else if you don't work for a property management company, right? So your real estate license does not allow you to practice property management for our brokerage, right? So we have a property management company you can refer everybody to. That's all good, great, and wonderful. And they have about 700 different clients with 700 different, there's 700 different accounts, and each one of them has a different client's name on it so that they can deposit the appropriate funds in the appropriate account so that the money that belongs to an individual stays in the account earmarked for that individual. You only need to worry about that because none of you will be managing properties. You will instead be helping people buy, sell, and invest in real estate, and that's awesome. All right, a salesperson asks that the broker return her license to the Division of Real Estate so she may transfer to a new brokerage. The sales agent makes the request in a certified letter, but after 10 days, the broker has not mailed the license to the division. What is true? A, the sales agent will lose her license. B, the broker could lose his license for failing to return a sales agent's license. C, the sales agent must wait for the broker to return the license. Or D, since the broker owns the agent's license, the broker gets to decide whether or not to send it. So what happens in this scenario? All right, so seeing a few different answers here. I've seen enough B's to go with that one, and that's the correct answer. When you ask a broker to send your license back to the state, they have to comply. It's your license. It has to be affiliated with the brokerage or it'll be inactive. But you are not obligated to wait any more than the requisite amount of days. You will not lose your license. You will not be in bad standing, and the broker actually has the risk there if they do not comply. All right, buyers make an offer to purchase property and to place $1,000 in earnest money into the broker's trust account. The seller wants the earnest money check made payable to them instead. The sales agent should A, tell the sellers that the sales agent may accept the check made payable to the broker only. B, not present the seller's offer, or not present the offer to the sellers. C, ignore the seller's request, as this is illegal and the sales agent does not have to follow any legal request. Or D, write a counteroffer stipulating the seller's request. All right, seeing A's and D's. A's and D's. We'll go with D, and that D is going to be your right answer. When it comes to earnest money, right? Pretty much everything's fair game as long as it's legal, right? You can't have contracts that require unlawful action or activity. But how much the earnest money is, where the earnest money goes in terms of whose account, what happens with any interest earned off the earnest money, all of that stuff can be stipulated between the buyer and seller. And so if the seller says, I want the earnest money check in my name, that's their counteroffer, or that's the requirement. And if the buyer refuses to do it, you don't have a deal. But if the buyer is willing to do it, they're well within their bounds legally to do it. All right. An agent wishes to specialize in commercial property. What should they do? A, seek additional education in order to be licensed to sell commercial property. B, find a broker that specializes in the sales of commercial property. C, they must have done at least 20 residential transactions to sell commercial property. Or D, stay with the same brokerage. Now, any of you that were with us last week This is a poorly worded question. And I think that it steers you towards B. And the thing that they're getting at here, and if we think about license law and what does that mean, your real estate license in Ohio allows you to sell real estate, land, new construction, existing homes, commercial, whatever. So you should stay with the same brokerage, right? You do not have to get additional certifications. You do not have to sell 20 properties. You don't have to do any of that. Now, depending on the brokerage, you may or may not be able to do commercial transactions because they are riskier. They involve more liability. They're a little, they involve more lawyers, which, no offense to any lawyers on the call, but we don't all love that. So here's the thing. When it comes to your license in the state of Ohio is good for residential, commercial, vacant land, any type of property, right? At our brokerage at Keller Williams Greater Metropolitan, you are able to do commercial with additional training and with the support of a full-time commercial agent. So you'll never have to say no to an opportunity here. However, you will need some additional training and some additional oversight. So for the purposes of the real estate exam, you're good to go on residential or commercial. So no need to change brokerages to do that. And that's what that context is, or that question's really getting at. So for any questions like that, remember, like, hey, what are they trying to test my knowledge on? All right. A broker and seller agree verbally that the broker will assist the seller in finding a buyer. The broker then finds a buyer for the seller, but the seller refuses to pay the broker commission. What statement is true? A, the broker can recover under the statute of frauds. B, the broker cannot recover because the listing was not in writing. C, the sales agent can sue the seller for not paying a commission. Or D, the seller must pay the commission. All right, seeing the chat box loaded up with B's. And that's correct, guys. To be enforceable, contracts have to be in writing. Listings most specifically. The statute of frauds applies to real estate sales contracts and not to listings. The sales agent cannot sue the seller for a commission since the commission belongs to the broker, not the agent. All right, what language does the statute require? Does state statute require in a listing agreement? Excuse me. What language does state statute require in a listing agreement? Is it A, the statement that block busting is illegal? B, the definition of steering? C, full legal description of the property? Or D, explanation of fair housing law? All right, little all over the place here. Let's see, D. So we got a little bit of everything here. The answer is block busting is illegal. That needs to be included. That needs to be included in the every listing agreement, as it is in ours and all of the standard forms. Full legal description is not required of the property, just the address is sufficient. So when it comes to what's required in a listing agreement, a statement that block busting is illegal. All right, for a minimum of how many years must a broker keep records? A1, B5, C2, or D, 3 years. You guys were all over that one. It is 3 years. All right. Who administers the real estate license law? A, the Division of Real Estate. B, the Real Estate Commission. C, the police. Or D, the Department of Commerce. Who is administering real estate license law? All right, we're getting a lot of A's and B's. Not seeing any C's, so that's okay. Probably majority A in there, and that's correct. Anywhere you see license or anything involving your license, right? You apply to take your exam, your application for a license, you're transferring your license, you're renewing your license, you're making your license inactive. You're doing all of those things with the Ohio Division of Real Estate. So anything involving your license is going to involve division. All right, what would be a violation of Ohio licensing law? A, making an earnest money deposit check payable to the buyer's broker. B, making the earnest money check payable to the seller. C, making an earnest money deposit check payable to a salesperson. Or D, making an earnest money check payable to the seller's broker. All right, lots of C's, and that is correct. That is, I know I said you can do whatever you want with earnest money. You cannot make it payable to a salesperson. That's the one caveat. You cannot make earnest money checks payable to sales agents because we do not have trust accounts set up for those. Brokers do. That's the designation. All right, question number 18. A sales agent is advertising his firm's listed property in a local newspaper. The sales agent must make sure that the A, broker's name appears in equal or greater prominence than that of name of the agent. B, the agent's name and the broker's name are in different colored type. C, the agent's name and the broker's name are the same size. Or D, the agent's name and the broker's name are in the same font. All right, and this is A, greater or equal prominence. This is called Prominence Law. It's unique to Ohio and a few other states, but your brokerage's name has to appear of an equal or greater prominence on all marketing that you, all marketing. So, you know, this is your sign, your flyers, your business card, you know, all of that stuff. And we help you with all of that when we get you set up, get you onboarded, get you all raring to go. We make sure that you, and if you know you ever have a question about your marketing and is prominence an issue, blah, 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 do not contact the division or the commission or anybody with the state of Ohio. You can come to us and we approve or disapprove any marketing. You do not have to go to the state for that. And if we say it's okay, then that becomes okay. All right, a broker receives an earnest money payment. The broker deposits the earnest money in his trust. By law, what is the amount of interest a broker may bear on this trust account? A, 0%, B, 4%, C, the minimum required by state usury laws, or D, 10%. All right, looks like you guys know you cannot earn any commission. Or excuse me, not commission. You can earn plenty of commission. You can earn no interest off of earnest money deposits. They just have to be in a non-interest bearing account. All right, who approves the appointment of an ancillary trustee when a broker has died? A, Probate Court, B, the division, C, commission, or D, Department of Commerce? All right, lots of A's in the chat, guys. If somebody dies, it's going to probate court. Now, if the broker is suspended or resigns, then that would be taken over by, oh my gosh, I started talking this one out and I have maybe confused myself. That would be the superintendent would appoint a new trustee. Superintendent of the division would appoint a new trustee, or excuse me, yeah, an ancillary trustee if necessary. Because there are circumstances where there's another broker in the firm. But if somebody has died, an appointment is required, then that's going to happen through probate court. All right, gang. Flew through that one. Let's go back to working through. I think we said we wanted real estate or finance. Finance was the other front runner for. Now, help me out here, guys. We looking at finance as in financing, like mortgages and all that, or real estate calculations? Like, which one are we more intimidated by, right? The finance, which involves some math, or just the straight math? Natalie says finance, and we will go with that. All right. Let's get this underway. Each January, a homeowner receives an estoppel certificate from his bank indicating the A, closing cost incurred in selling the home, B, amount of the taxes and insurance held in escrow, C, the amount of real property taxes the homeowner will owe for the upcoming year, or D, the amount of principal remaining on the mortgage. All right, what do we have here? Yeah, B's, D's, and a C, but we've got an ample amount of B's. It's actually going to be D. So this certificate coming in every January tells you what the remaining principal on your mortgage is. So that'll come each January. All right, a homeowner receives a duplicate 1099 form from the bank showing how much interest has been paid over the last year, what the principal amount remaining on the mortgage is. This document is A, certificate of sale, B, certificate of title, C, estoppel certificate, or D, certificate of habitation. This is just the same question as the last question, phrased in a different way. All right, question number 3. Which type of single mortgage loan exists when 2 or more different parcels of property are offered as a security for the loan? A wraparound, B, a blanket, C, a variable rate, or D, a fixed rate? All right. The B's have it. A single mortgage that has multiple properties as collateral is called a blanket mortgage. All right. Well, looks like we're just going to double up all these questions. A blanket mortgage involves A, a single loan with 2 or more parcels of property offered as a security. B, 2 loans combined into 1 interest rate. C, a fully amortized mortgage. Or D, a loan with a balloon payment at the end. It's A. Just covered that. How many square feet are in 2 acres, team? As promised, you will need to know for at least one question. This is a freebie. How many square feet are in an acre? Is it, and in this one, we need to know how many are in 2. So is it A, 87,120, B, 65,000, C, 90,000, or D, 75,000? Very happy to see all these A's in the chat box because 1 acre is 43,560 square feet. Don't know how to tell you that you're going to need to know that, but you need to know that. There's no easy way to remember it. Maybe get a tattoo on the inside of your pinky or something like that. But you will need to know for at least one question on your Ohio Division of Real Estate salesperson exam that there are 43,568 square feet in an acre. All right, the seizing of property by court order as security for debt or judgment is known as A, an encumbrance, B, capitalization, C, attachment, or D, alienation. Seizing of the property by court order as a security for debt. All right, we've got several, it looks like, A's and several D's as well. I'm gonna go with, looks like we got more D's than A's, so we'll go with D. The answer is actually C. So I don't know if anybody threw that in there. Seizing by court order is attachment. Usually the property that is attached to be sold at a public auction to satisfy a judgment. So let's clear up what these other things are, because it's important to know. If you know what everything else is, and you didn't go with the one you don't know. Alienation is transferring interest in a real property, right? That is leaving or alienating interest in real property. An encumbrance is the burden on a person's title. So your title would be encumbered, with maybe unpaid taxes. Capitalization is the calculation of value according to income and rate of return, right? So if knowing all those things to be true, attachment is the seizing of property by court order. Question number 7, a lump sum payment of principal is due at the end of which type of promissory note? A, fully amortized, B, balloon, C, wraparound, or D, major? All right, seeing all the B's, that's correct. It's a balloon payment. The lump sum due at the end. Fully amortized is where you pay a little bit of principal and interest every time, so there's no lump sum there. Wraparound notes involve more than one loan, and there's no such thing as a major note. At least maybe in music there is, but not in mortgage financing. All right, after buying property at a sheriff's foreclosure auction, which document would a person receive to prove he is entitled to the deed upon confirmation of the sale? A, a certificate of no defense, B, a certificate of sale, C, a certificate of habitation, or D, a certificate of title. Sheriff's foreclosure auction. All right. Strong opinion for B, and that is correct. Is issued to the buyer at a foreclosure auction and entitles them to the deed upon the confirmation of the sale by the court if the land is not redeemed or the property is not redeemed during the redemption period. All right, a partially amortized note, which reduces part of the principal by the time of the final payment is due, is often called A, wraparound mortgage, B, a balloon payment or balloon note, C, a fully amortized loan, or D, a conventional loan. All right, so seeing some B's and C's in the chat box. So in the question, it says it's a partially amortized note. So fully amortized loan might not be the right answer if it's going to be fully and partially amortized. This is a poorly worded question. There should probably be a little bit more final, like, payment being like a lump sum payment. I think this is actually supposed to be a balloon note because there can be amortization, although it's just partially amortized. So you might be $100,000 note, and in 5 years, at the end of 5 years, you owe $50,000, right, as the balloon payment, but you don't owe $100,000. It's not a term loan or any balloon payment where there's, it's partially amortized or not amortized at all until it's due. Fully amortized loan and conventional loans. Fully amortized loan is a fully amortized loan. A conventional loan is just a loan that is not insured or guaranteed by a government entity. So that could be any type of loan. Property is attached in order to A, construct zoning boundary lines, B, provide security of payment for debt or a judgment, C, compute valuation for mortgage loan purposes, or D, compute cost replacement value. There's that attached word again. All right, seeing all the B's in the chat box. That is correct. Attachment is the court-ordered seizure of property, provides security for payment of a debt. All right. That's one we'll probably need to revisit. I feel like we were a little bit all over the place there. That's okay. Now we got time for probably one more. Let's see what else we saw here. I think contracts was what we said we were going to try and sneak in. So let's get a couple questions into contracts. All righty. The first instrument a buyer usually signs in a real estate transaction is A, a listing agreement, B, an offer to purchase, C, a deed, or D, a mortgage. What's the first thing a buyer For anyone who answered A, sellers sign listing agreements. So the first thing a buyer is likely to sign in that process is the offer to purchase. You're going to sign their offer to purchase, then they're going to sign for a mortgage, then they're going to sign the deed, but they are not going to sign a listing agreement because that's between the seller and the broker. Question number 2. If Ed purchases a property from Susan by an installment land contract, when will title pass to Ed? A, when the deed is placed in escrow. C, when the seller exercises the liquidated damages clause. D, when the contract has been signed by all parties. Or D, when the deed is delivered to the buyer. So a lot of D's in there, and that is correct. Ed does not come into title until the deed is delivered, and the deed isn't delivered until the contract terms are fulfilled. And so all this simply is the seller is playing bank. And so instead of with a purchase money mortgage where your bank actually gives the seller all the money up front and you give the bank the title to your, you're mortgaging the title with the bank. Here you pay until you have the deed and then you get the title. A purchase and sale agreement stipulates the earnest money deposit to be placed in a separate interest-bearing account with any interest earned split between the buyer and seller. This is A, not okay, and the broker should resign the listing. B, money laundering. C, against the law. Or D, okay, because the buyer and the seller have agreed to it. All right, see, we're a little bit all over the place here. The answer is going to be D. Remember, with earnest money, if it's in the contract, the buyer and seller agree to it, the buyer and seller are okay with it, then the buyer and seller, then this is fine, right? There's no requirement that interest not be earned off of it. It's only that the broker can't earn interest off of it. So, it can go anywhere that the contract stipulates, except to the salesperson. All right, question number 4. A subdivision developer employs agents sue to sell lots. John, a licensed agent, offers to buy lot B3 for $20,000. A sales contract is executed. However, through a typographical error that no one notices, the contract identifies lot D3, which was listed at $25,000. What is the contract's status? Is it A, invalid, B, voidable, C, void, or D, enforceable? What is the contract's status? All right, seeing a lot of B's in there, and B is going to be correct. All agents and all parties to a transaction should carefully read the documentation. Documents, as the document is prima facie evidence of the agreement. Having an agent does not relieve a client of this responsibility. Mistake that is mutual, material, unintentional, and free from negligence may cause the contract to be voidable. In this case, it would be voidable by the developer, though he may decide to honor the deal. So the injured party can void voidable contracts. So in this case, the developer, due to a typographical error, is selling a $25,000 lot for $20,000. He is the injured party, would have the right to void it. Listing agent Jill notifies a client that she is bringing her an offer to consider from an MLS agent. On the way to the house, Jill receives a call from a buyer with whom she has an agency relationship. The buyer wants to see the listing, and she agrees to meet him at the house. The potential buyer wants to make an offer and asks Jill to suggest a price that would be good to offer. Jill looks at the offer sent by the other MLS agent and suggests that the buyer offer $500 more than the other agent. Which statement is true? A, the broker should be proud of the listing agent. B, the listing agent has nothing to worry about. C, the listing agent did exactly the right thing. Or D, when acting as a dual agent, a salesperson cannot suggest or recommend specific terms. Yeah, guys, as I hope it goes without saying, this is illegal and also a violation of ethics and integrity and a number of other things, but you cannot offer advice or suggest or recommend specific terms if you're acting as a dual agent. In order to have a valid contract, the good faith deposit must be paid in the form of A, a cashier's check drawn on the buyer's bank. B, anything the parties agree on. C, a personal check drawn on the seller's bank. Or D, cash money in small bills. B is correct. Anything the parties agree on is okay. Good faith deposit is just earnest money. All right, Colin makes an offer to buy a seller's property and gives the seller $2,000 as earnest money. Before the seller can decide to accept the offer, Colin calls the seller and announces that he is withdrawing the offer and asks the seller to return the earnest money. Which statement is true? A, the seller gets to keep the earnest money. B, the broker gets to keep the earnest money. C, the buyer is entitled to get the earnest money back, or D, the buyer is breaching the contract. The answer is C, and that is because prior to it being a valid contract, that earnest money is the buyer's. So the seller never had a right to it. It was never under contract, could never be disputed. So by all means, the buyer is entitled to get their earnest money back. Contract law requires which amount of earnest money to be submitted with a sales contract? A, at least $1,000. B, no earnest money is required in form of contract. C, 10% of the asking price, or D, 6% of the offer. All right, we are really just driving this point home tonight. No earnest money is required to form a contract. Lauren receives an offer on her property and makes a counteroffer. Meanwhile, another offer comes in from another broker. The listing is A, active, B, withdrawn, C, pending, or D, contingent. What's going on with this offer? She received an offer, made a counteroffer, got another offer. So until she accepts an offer, her property remains active. She can counter, get 1,000 offers, get one offer, get no offers, and it remains active. As soon as she accepts an offer, then it moves to contingent, right? But the process of negotiating, right? Offer, counter offer, so on and so forth, that doesn't affect the status of the listing. It remains active. All right, a seller and buyer agree on terms of a purchase and sale agreement and are now waiting for closing to occur. Unfortunately, before closing, the improvements on the property are struck by lightning and totally destroyed. The buyer may do what? A, accept the property and claim the insurance proceeds. B, terminate the contract. C, any of these answers. Or D, accept the property as is. All right, C is going to be the correct answer. Any of those are the options of the buyer in a situation such as this. All right, let's get one more in here before we wrap for the night. An agreement of sale is a contract between A, the buyer and seller, B, the seller, buyer, and the mortgagee, C, the buyer and the broker, or D, the seller and the broker. Well, who is an agreement of sale a contract between? All right, seeing some A's trickle in there, and it is A. The agreement of sale is between the buyer and the seller. The listing agreement is between the seller and the broker. A mortgage contract is between the buyer and the bank. So it's just an agreement of sale between those two. Now, real estate agents are involved, but it is between two individuals, a buyer and seller. We're just going to keep going here. Let's get all these knocked out. Once parties have signed a purchase and sale agreement, the buyer's earnest money check is deposited in the broker's trust account. Whose money is it? A, the buyer's until closing. B, the seller's until closing. C, the broker's is prepayment of the commission. Or D, nobody's until the transaction is either completed, rescinded, or breached. All right. D is going to be correct. It's nobody's money, right? Before it's under contract, it's the buyer's money. After, it's the seller's money. While it's under contract, it's nobody's money. This is going to be an important thing to reiterate to all of your clients as they put earnest money in, and then they want to withdraw their offer. That earnest money could be held, either held in trust for years or go to the seller, depending on what's going on with that specific deal and the purpose for the withdrawal, if they won't sign a mutual release. So you want to make sure that they're clear that it's the gray area, right? If there are 100 issues in real estate, 98 of them are going to be related to earnest money. What is the best explanation of an option? A, document involved in the closing of a real estate transaction. B, a clause that grants either party the right to cancel the contract, provided legal notice is given. C, an agreement with consideration granting exclusive rights to buy or lease a property at a given price within a stated period of time. Or D, the legal procedure or action brought by either the buyer or seller to enforce the terms of the contract. All right, Ariel out of the gate first with C, and that's correct. An option gives one party the right to make a decision around predetermined previously stated prices or terms. So, you see this a lot in leases, 5-year lease with an option to renew. You don't have to renew, you have the option to renew. Which would a buyer prefer, land installment contract or purchase money mortgage? A, either, as both convey equitable title. B, either, as they both convey legal title. C, a land installment contract, or D, a purchase money mortgage. All right, in the essence of time, I see the D's coming in, and that's correct. The buyer would prefer a purchase money mortgage. They receive the deed to the property on the day of closing. In a land contract, they don't get that until the final payment's made. All right, last question for the night. Buddy wanted to offer to purchase the Walker's home. He engaged Joan to be his agent. When the offer was delivered to Mr. Walker, it contained the provision limiting the time for acceptance to 48 hours. Mr. Walker rejected the offer out of hand as inadequate. After thinking about it for 24 hours, Mr. Walker called the agent Joan and said, "I've changed my mind. I'll take Buddy's offer." What's the status of Buddy's offer? A, it is still open. Buddy has not formally withdrawn it. B, it is still open. It has 48 hours to withdraw. C, it's terminated when Mr. Walker first rejected it. D, it is a binding contract now that Mr. Walker has accepted it. All right, C's in the chat, and that is correct. Rejection automatically terminates offers. All right, gang, real quick before anyone hops off, if you have your real estate exam scheduled with the Ohio Division of Real Estate, please, for the sake of us being able to support you, wish you well, and send some good vibes your way on that day, please drop into the chat box what day you were scheduled for so Danielle and I can send you some love. If that is, if you're not scheduled yet, get scheduled. You guys are tearing it up here on this. Make sure that you are in a position to maximize your opportunities with a career in real estate by being licensed before the end of this year, soaking up some of the great trainings that we have, and hitting the ground running in 2022. As always, guys, if you need anything from me, I'm putting my email in the chat box. Whoops, let me just get that, kw.com. Please, feel free to reach out with questions, comments, concerns, smart remarks, or physical threats. I will hear all of them via email, and I'm happy to help even outside of these study sessions. If there is nothing else, thank you all for a lot of participation tonight. Excited to be back here next week and looking forward to chatting with you all and helping you all pass the exam. Have a wonderful evening, and we will see you soon.